Teladoc stock took a deep plunge when it posted more than expected loss. Let's explore in this video what is going on with this stock now, why it crashed 40% in one day, how come Cathy Wood is still buying it while its valuation is going down, and at the end my perspective if it is a buy or sell. Hi, my name is Sunny and I make content that affect a common man financially. So let's dive into today's topic, sinking Teladoc stock. If you're new to this channel, please subscribe to it alongside smashing that like button as that will help me with the YouTube algorithm, which of course will be highly appreciated. It is clearly evident stock price of this struggling healthcare company simply collapsed late last month when it posted more than expected loss for Q1 2022. Not very long time ago, this stock was touching almost $300 a share. Everything was looking nice and rosy while they were making big acquisitions. In my limited wisdom, they did overpay. This is why now they are writing down billions of dollars in acquired assets. The culmination of all this resulted in stock losing 40% of its value in one trading day when it touched a 52-week low of almost $28 a share. Naturally, it came as a surprise to many, even though all growth stocks are facing valuations headwinds in today's increasing interest rate environment. We all understand times of cheap money and exuberant stock prices for growth stocks are thing of the past. When the cost of borrowing money was next to nothing, almost everybody was an expert in stock market investing. But the real skill gets tested as interest rates starts to creep up. The growth stocks are losing their lofty valuations, but Teladoc has got bigger problems on its plate. When a stock misses its guidance, a common investor thinks it is an unfulfilled promise. The only reason people invest in stock is to get an expected return on their money employed, where we fully understand that there will be some deviations, but the company will do its best to generate a shareholder return. That is where I think Teladoc has got some soul searching to do because in 2020 they did execute a huge multi-billion-dollar acquisition which they are now writing off in valuations by over $6.5 billion. We all understand there are some risks when you are buying assets, but overpaying by $6.5 billion came as a shock to many. And the second one relates to their financial guidance, which is a sort of roadmap for investing public how much revenue and profitability they can expect in the next quarter or in the next year. I must say investors were shocked when the company reported a net loss of $41.58 a share, most of which came from non-cash goodwill write-off charge for its messed up acquisition, but they even reduced their full 2020 guidance too. I know there can be some logical reasons behind it, but when you have professional managers running a company, the last thing investing public expects is unpredictability and of course better performance from them. Teladoc is ARKK ETF's third largest holdings with nearly 7% weightage. Cathy Wood has been very bullish on this stock for a while now, and I must say hers is not the only fund who has got huge exposure in the stock. While Teladoc stock is racing towards its 52-week low, but the fact remains Cathy Wood was buying more and more of it even though she has lost 40% on the day it crashed. Only she knows the reasons behind her recent purchases. Either she has got very high conviction in it or trying to dollar cost average or both. Neither stock investing is for faint-hearted nor the ones who take short-term view of the stock market in my limited wisdom. When you ask investors, everybody says they are long-term investors, but whenever there is a downward trend in stocks, they are the first ones to panic and sell, where now you convert your paper loss into actual monetary loss. I preach and practice a very important rule before investing, which is to have a plan ready even before you buy any asset. Basically, you should have it all written down somewhere, the reasons why you are buying it, how much you are willing to pay for it, and most important, at what price are you comfortable selling. The logic is during times of exuberance or when the markets are crashing, you have a roadmap already in place about the actions you need to take without panicking. Remember one thing, there is a huge difference between a fund manager buying a stock whose risk is diversified across its holdings and an individual buying it whose risks are more concentrated. That is the reason I only buy individual stocks in whom I have lot of conviction, and unfortunately Teladoc is not one of them. I hope it makes sense, as I'm just a random guy on YouTube having an opinion and not even a financial advisor. Please consult one before investing. If you have found value in the content that I make, please help me and my channel by liking, sharing and subscribing to it. Thanks for watching and see you in the next one.